It's exciting. This is a very popular seminar, and I'm so happy to be able to provide it to you. This is Diana Chan of Chan CPA Company, Inc. Again, welcome to everyone. Before I start our presentation, I just wanted to remind you that there is a Q&A button right on the bottom of your screen, so you're welcome to submit questions if you have any, and we'll be taking questions at the end, and throughout the process, we will be trying to answer whatever questions you may have. Now, if there are questions specific to your company, we will be happy to answer your questions offline via email or teleconference. Today's seminar is to focus on understanding the basics of the PPP loan forgiveness application requirements. On June 5th, which was a really important date for all of us to remember because changes did occur for the Paycheck Protection Program Flexibility Act of 2020 that was signed into law by President Trump. God, that was a lot to say, wasn't it? And this modified the PPP and some of the forgiveness requirements. This is why we wanted to make sure that we had enough information and we were able to pull the information from the SBA regulations to make sure to have everything on site for you. And the last document that we received was yesterday, June 16th. Now, what I want to make sure that you are aware of is this presentation has been updated based upon our current understandings of the new requirements. However, as you know, this has been a very fluid situation, and some of this information may change as the Treasury Department and SBA start to interpret the new laws and make their determinations. The SBA has issued a revised instruction for the forgiveness application on June 16th. And by the way, yes, we have a copy of the presentation SBA application in our presentation, and we'll be happy to send out handouts after this presentation is done. And absolutely, of course, we're continuing to send out our special newsletters and keep you advised. Now, for the next slide, I wanted to tell you the meat and potatoes of what is going on, and that is in the loan forgiveness application overview. Who is required to file the forgiveness application? You, as the borrower, must complete the forgiveness application in order to get forgiveness on your loan. When? Well, first of all, whom do you have to submit it to? You're going to have to submit it to your lender. Now, it's either going to be a hard copy submission to your lender or on your lender's online portal. Many times, the lender will create online how they want the information to be provided. These informations that you'll be receiving will be structured based upon the SBA application format. When is it going to be due? It is going to be due to prepare these forgiveness applications within 10 months after the date of the loan forgiveness covered period. And please keep that in mind, 10 months after the last date of the loan forgiveness covered period. Now, what's going to be as much importance as always, the borrower must retain all paperwork regarding their forgiveness for at least 6 years. Now, that means all supporting documentations, all the information you used included on the worksheets that are requested to prepare the application, you must keep. It's no different than when filing any IRS tax form where you're going to have to keep those supporting documentations, and we recommend a 7-year time period. And the reason that this is going to be needed to keep those documents in place is because the SBA can review them at any time. I wanted to do this in a flowchart manner. What is the PPP loan forgiveness application process? Because it can be confusing, and this will be really positive in that, one, the borrower submits the loan application. That's the first step. the borrower submits the loan application within that 10-month period of time. Number two, the lender has 60 days to make an initial level decision. If the lender approves the submission of all of your application for forgiveness, it moves up into the lender's queue to send to the SBA for review. And it is up to the SBA to decide within 90 days if they approve what the lender has said. And at that time, the lender will then refund the monies from the SBA to the lender for your loan forgiveness amount. Now, if by chance, once you submit your application and you provide all the necessary supporting documentations that are required, the lender indicates that they will not entitle you to forgiveness or a portion not for forgiveness, you have an opportunity to appeal with the SBA within 30 days from review of the lender's decision. And also, there could be this opportunity where the lender approved the forgiveness amount, and after the SBA reviewed the documents, the SBA denied it. The borrower still has 30 days to appeal to the SBA, and also if the loan forgiveness portion is denied, the borrower is still responsible for the loan. Now, please keep in mind, it is important, and I want to make sure that you don't fret about this so much, because the loan itself is a 1% rate over a 2 to 5 year period of time, depending on what your decision with your lender will be. So I just wanted to give you a positive about that if in fact the loan gets denied. Now, this is really important, and this is what changed on June 5th that I need to make sure you are aware of. The PPP Loan Forgiveness Covered Period has changed. Effective June 5th, the covered period now is the earlier of 24 weeks or December 31st, 2020. However, those loans that were funded prior to June 5th has the election by the borrower to choose the 8-week period of time. Most likely for most of our clients, I really sincerely believe the 24-week period makes most sense, but there could be opportunities in making the election for the 8 weeks, and that would be on a one-on-one basis specific to your situation. And so we should at least look at that if ever you had that question. There is another interesting fact in regards to the term covered period. And you may have heard this term talking about alternative payroll covered period. Well, first of all, it specifically is only relating to the alternative payroll covered period for payroll only. Otherwise, it is not going to be related to you. As well, it's only going to be related to those who have payrolls that are either biweekly or weekly. So if you have a monthly payroll, or if you have a semi-annual payroll, or if you have a quarterly payroll, this is not going to apply for you. Nor does it apply for those who are on the semi-monthly period. So you've got to really recognize when you might qualify for the alternative payroll period. And I'll tell you an example of when this might occur. There have been instances where I've had some of you call and ask, gosh, Diana, I received my loans on this particular date, but my payroll was the week before that. How do I fix that? What do I do? So this gives you the option to change your payroll covered period to sort of match for 24 weeks, and or if the election is made for 8 weeks. That was what the reason for this process and opportunity came up. So I just want to make sure to remind you again, this is only really going to be related to biweekly or weekly payrolls. I gave you examples in here so that you can at least look to see what that might look like for you if it were a 24-week period of time. Now on slide 5 and 6, this is really important too, because a lot of you have been asking, what costs can be forgiven? Well, first of all, of the loan amount that was provided to you, a minimum of 60% is a requirement for eligible payroll cost. So this is important because you might have heard it used to be 75%. What happened on June 5th was there was an easing of this requirement because there were instances where situations, for instance, restaurants, we have restaurant clients and restaurants weren't able to open up during this order in place and shelter in place. Therefore, they couldn't bring their whole payroll folks in prior to make it equal to prior to February 15th of 2020. So that might be an example of why this eased up. And then another example is why they wanted to extend it to a 24-week instead of an 8-week period of time is due to that. It's really important to recognize payroll cost. Payroll costs are in 2 different categories: the paid and incurred payroll cost, and that might be when you pay your employees, that is definitely paid at that time, and incurred. Incurred is when it was earned. So other folks have asked, okay, can I pay for back pay? That is not in this qualification program. It is for current pay earned. And that is important to know. Now, it did address in the SBA regulations hazard pay, combat pay, and bonuses. If there are specific conscious decisions made where you wanted to give bonuses, where you wanted to give hazard pay or combat pay, yes, those would qualify as incurred payroll. So that's the first, which is the cash compensation. Then there's what we call non-cash compensation. Non-cash compensation of payroll costs would be an example of employee health insurance, contributions to retirement plans, and also employee state and local taxes. So those are what we would consider non-cash compensation. Now, there's one other sort of hiccup that I would believe you would need to understand in regards to eligible payroll cost. And that has to do with the owner-employee. So an owner-employee would be, for instance, you have an entity such as a corporation or an S corporation, and the owner may be a 50% or 100% owner of that corporation. And you also, because of that, we know you are also an employee of that corporation. Well, the limitation has always been $100,000 of last year's payroll. So up to, so for owner employees, they have a specific criteria for the entities of these employees. That is that your maximum amount that you could receive per week was $1,953 up to 8 weeks previously. And it's also based upon 2019 compensation. Now it has increased because of this new June 5th timeframe to a cap of $20,833. So that is very important for the owner employees. Additionally, for Schedule C filers and for general partners of LLCs or 1065 folks, partners, the cap is still $20,833. And also, you need to look back to your 2019 compensation to review what that maximum might look like. I know this is getting much more complicated than you ever thought, right? I hear you. So that was the 60% rule of the loan. Now, the 40%, the maximum amount of the loan, 40%, can be used for non-payroll costs of the loan to be forgiven. What is that? What constitutes that? There's three different types of items. First of all, what constitutes that is business finance interest payments. That could be on real or personal property. Personal property such as equipment, finance charges or interest, vehicle, if the entity owns the vehicle and it's in the entity's name, yes, those would be business interest expense. And if you own the property that you are in, you can write off the interest amount paid for that period of time up to 24 weeks and at a maximum of 40% to be used for that. And of course, business rent. If you paid business rent, now you can literally write up to 24 weeks worth of business rent. That's equivalent to about 6 months worth of business rent or lease payments on real or personal property again. And the only criteria is that whatever your agreements were had to be pursuant to lease agreements in force by February 15, 2020. An example of that is if you decide to buy a piece of equipment after you received the loan, that business interest amount would not, or that lease payment would not qualify, because they really want to make sure that this PPP program qualified for the loss of whatever happened during this pandemic time frame. So I wanted to make sure as well that you knew that business utility payments do qualify. That will be electricity, your gas, your water, your telephone, your internet access that you were committed for before February 15, 2020. I added transportation in here, but please be aware that's only in regards to transportation required to bring the gas or water or electricity or internet to the facility of which you're producing your workplace at. Again, I just wanted to make sure you understand that these amounts, these non-payroll costs, must be paid or incurred during the covered period, not the alternative covered payroll period, but during the covered period. And so that's very important for you to know too. So here are some things that I needed you to know in regards to what are some of the things that would reduce the forgiveness amount. Well, quite simply, number one is if you don't meet the percentage criteria. Percentage criteria would be if you don't meet the payroll percentage criteria of 60%. That or you exceed the 40% of the maximum utilization for rent. That would reduce the forgiveness amount. Number two, if your head count changes from prior to February 15th, 2019 to where you are currently when you have hired your employees back. There are, though, instances where we might be able to utilize exemptions and safe harbors, of which I'll be providing you that detail later. But I also wanted to say the third instance is where the employees' wages were reduced more than 25%. So the same employee, but you reduce their wages more than 25%, then that may reduce your forgiveness amount. The fourth item, which is of very big importance, because I know a lot of you went ahead and filed for the emergency disaster loan monies, and many of you might have received anywhere between $2,000 to $10,000 in grant money. Well, when the borrower receives that money, that is going to reduce the forgiveness amount. But the good news is, in regards to utilizing the EIDL, the fact there are less criteria on what you can spend that money on. All right, so now what we want to talk about, which I mentioned, is some of the FTE reduction exemptions. I wanted just to give an example, because there are instances and situations, and I've heard it from many of you, in which, gosh, I offered my employee to come back. I'm sorry I couldn't bring back the employee to work full time, but I did offer them to come back. But they decided not to take the offer, and they rather stay on unemployment. What do I do? So as well as you can document, as if you could document this, and we recommend by documenting this in writing, that the employer was offered the position back and the employee refused or rejected the offer back, that can help to reduce the reduction of the exemption. So essentially, that can keep your forgiveness amount to exceed what the reduction might have occurred on. If you had to fire an employee voluntarily, they resigned, that could be another reason. And the most important thing of all of these items, as I've provided you, is that you need to make sure to keep supporting documentation in regards to that. I also wanted to show you this, which was really important, and it's in the handout. The SBA just issued yesterday the new applications, and bless their hearts, they did something even better. They gave you two different kinds of applications. The first application on the left is the regular PPP loan application forgiveness. And if you follow my mouse all the way up to the link, up to the PPP loan forgiveness application, it shows you a little hand. When you receive the handouts, it'll actually show you the link to receive those actual forms from the SBA. I will have to tell you, there are 5 pages of application in regards to the PPP loan forgiveness application. By the way, that was the only application until as of yesterday. We were happy to see they did now create what they call a PPP loan forgiveness application EZ form. So instead of 5 pages, it's down to 3 pages of worksheets. In addition to the worksheets that will be required, though, they do want to provide, and they want you to provide the supporting documentation of how you derive the numbers that you did derive the numbers for. So to the very end slide, I just wanted to say, first of all, thank you for coming. Chan CPA is here to assist in any of these following ways. We wanted to give you the basic understanding of the PPP loan forgiveness requirements. We certainly have helped many of our clients apply for these PPP loans. We are definitely available to help in the election of covered period, 8-week or 24-week, because there may be instances where you might choose that. We can help in preparation of the loan forgiveness application. We can help in providing tax planning strategy in regards to the loan forgiveness application timing, because it's a 10-month period of time before you have to file. So that could straddle between years 2020 or 2021 perhaps. And it depends, because once that loan forgiveness application has been accepted and forgiven, then comes what the IRS has already immediately, as soon as this PPP loan funding occurred, they sent out, of which you've seen in our special newsletters, the comment, which is of 2020-32, deductions disallowed when CARES Act PPP loans are forgiven. What does that mean? Well, this is why it will be important for us to help you and help into determining the possible taxable income straddling that we might want to do for 2020 and 2021. Because here's an example. If all $100,000 that you might have received in loan was spent 100% on payroll, that would mean that this income was specifically going towards a deduction that is disallowed. Thereby, it creates taxable income. So I just wanted to give you that information as well. We are so happy you joined us. Thank you for joining us today. We hope you stay safe and healthy, and good luck to all of you.